Ben Jones here, CEO and founder of BA3 Accounting. We've all heard the phrase, cash is king, right? But let's be honest, cash flow management often feels like the neglected prince that's left out in the rain. And that's a problem because effective cash management is the key to your business's long-term survival. And it's the #1 reason that businesses fail. First up, plan and monitor your cash flow. A solid cash flow budget and then a forecast is like your business's financial GPS. It shows when the money is coming in and when it's going out. It helps you spot when you'll have extra cash and when you might hit a dry spell. It will throw up red flags before the financial problems turn into a crisis, and that you do not want. Next, know which levers to pull to adjust your cash flow. Need more cash? Think about tweaking your pricing, boosting your sales, and managing those debtors like a pro. On the flip side, reduce cash flows by slashing unnecessary expenses, optimizing your inventory, and reassessing staffing needs. Maybe even refinance your loans or sell off those dusty, underused assets. You just have to have a plan. Now, if you want to boost your sales, consider an advertising campaign to reel in more customers. And no, it doesn't have to break the bank. Digital marketing channels like social media offer cost-effective ways to promote your products, but you might have to put in a little elbow grease. Then there's tightening those credit terms. You can also look at the late payments because those can sink a small business faster than a lead balloon. Minimize your exposure to debtors with clear documented processes and prompt invoicing. Consider shorter payment terms for your clients and offer multiple payment options to make it as easy as possible for your customers to pay you. Early payment discounts can also be a nifty little incentive. And do not be afraid to follow up on those accounts that are delinquent. You may have a good relationship with your customer, but if they owe you money, you have to follow up without ruining the relationship. If they won't pay you for your work, then it's simply charity. Now, many companies don't keep an eagle eye on stock levels, and good stock control means aligning purchases when necessary. The cost of extra stock can be a debt to carry that stock, as well as the interest on that debt, as well as increased storage costs, which can mean insurance, management, waste, utility bills, and even more. So that's always a big one to think about. Lastly, reduce your cash outflows. It's important to regularly ask yourself whether your operations are streamlined. Can you cut down on office supplies, energy costs, or negotiate better deals? It's amazing what you can get if you just ask. Every penny saved is a penny that boosts your cash flow. Remember that it helps to build a cash reserve too. It's your financial safety net for unexpected expenses and a cushion that lets you seize a strategic opportunity when it presents itself. Don't fret. If it all sounds a bit foreign, why don't you improve your financial skills? Seek expert advice because that can work wonders. Now, attending workshops, consulting with accountants, and using top-notch accounting software can all help you stay on top of your game. At BA3 Accounting, we're here to help you navigate these waters because when it comes to cash flow, it's not just about survival, it's about thriving.